Hello there, fellow passengers on the roller coaster of global finance. Buckle up, because today we're diving into the wild, unpredictable world of the stock market. If you've been anywhere near a news source lately, you've probably heard whispers, or maybe blood-curdling screams about the stock market. It's been a whirlwind of emotions, with investors on the edge of their seats watching every tick and turn. Spoiler alert, it's not pretty. The market's been on a roller coaster ride, and not the fun kind. We're talking about the kind that makes you question your life choices. We're talking a full-on financial nosedive, the kind that makes your stomach churn and your 401k cry out in terror. It's like watching a slow-motion car crash, and there's nothing you can do to stop it. The Dow Jones, that granddaddy of market indices, took a swan dive off a cliff, plummeting a gut-wrenching 2,200 points in a single day. It's a drop that will go down in history, leaving investors reeling. The S&P 500, not to be outdone, decided to join the free fall, shedding a cool 6%. It's like a synchronized dive, but instead of applause, all you hear are gasps of horror. And let's not forget the tech-heavy Nasdaq, which entered what the experts so delicately call a bear market. A term that sounds way too cuddly for the financial carnage it represents. It's a bloodbath out there, folks. But hey, it's not just the US markets throwing a tantrum. This is a global phenomenon, a financial contagion spreading across borders. Oh no, this is a global meltdown party, and everyone's invited. From the bustling streets of New York to the financial hubs of London, Tokyo, and Hong Kong, the panic is palpable. From Asia to Europe, stock markets are painting the town red, and by red, I mean the color of your portfolio after a week like this. It's a sea of red numbers, and there's no lifeboat in sight. The Hang Seng in Hong Kong, down a whopping 13%. It's a staggering drop that has left investors shell-shocked. The Nikkei in Japan, sayonara to 7.83%. It's a brutal hit, and the ripple effects are being felt far and wide. It's enough to make you want to bury your savings in your backyard and hope for the best. But remember, in times like these, it's important to stay informed and make decisions based on facts, not fear. So, hold on tight, and let's navigate this financial storm together. So, what in the name of Adam Smith is going on here? Why does it feel like the economy is on a roller coaster ride with no end in sight? Well, as with most things in life, you can blame it on politics. The decisions made in those grand government buildings have far-reaching consequences. Remember those tariffs that were supposed to make America great again? They were meant to protect domestic industries and create jobs. Yeah, about those. Turns out slapping hefty taxes on goods from other countries might not have been the economic masterstroke some people thought it was. Instead, it created a ripple effect. The trade war, that epic battle of wills between the US and China, has officially gone from simmer to boil. Negotiations have been tense, and neither side is backing down. Tariffs are flying faster than insults at a presidential debate, and the global economy is caught in the crossfire. Markets are reacting unpredictably, and businesses are feeling the heat. See, when you make it more expensive to import stuff, companies have to raise prices. This isn't just a minor inconvenience. It affects the entire supply chain. And when prices go up, consumers start tightening their belts. Families begin to budget more strictly, and discretionary spending takes a hit. And when consumers stop spending, well, let's just say the economy gets a nasty case of the sniffles. Retailers struggle, and businesses start to feel the pinch, which can quickly turn into full-blown pneumonia. The cycle of reduced spending and economic slowdown can be hard to break, leading to long-term consequences for everyone. Adding fuel to the fire is the curious case of the shrinking dollar. Remember when the US dollar was the undisputed heavyweight champion of global currencies? Well, it seems even the mighty greenback has its off days. Recently, the dollar took a tumble faster than a contestant on Dancing with the Stars with 2 left feet. Now, a weaker dollar isn't necessarily a bad thing. It can make US exports cheaper and give a boost to American companies trying to sell their wares overseas. But, and this is a big but, no pun intended, it also makes imported goods more expensive for us folks back home. And let's be honest, we Americans do love our imported goods, from our German cars to our Chinese electronics. So we've got trade wars, a wobbly dollar, and a stock market that's decided to take up skydiving without a parachute. What's an investor to do? Well, that's where those cryptic things called economic indicators come in. These are the vital signs of the global economy, the numbers and figures that tell us whether we should be breaking out the champagne or stocking up on canned goods. And right now, those indicators are sending out some mixed signals, like a teenager trying to decide what to wear to prom. On the one hand, the US economy is still adding jobs, which is good, right? But on the other hand, inflation is still stubbornly high, interest rates are rising, and consumer confidence is about as stable as a Jenga tower built by a toddler. It's enough to make even the most seasoned economist reach for the antacids. Section 5 AI, the Sherlock Holmes of market analysis. Now you might be wondering, how the heck are we supposed to make sense of all this economic chaos? The stock market is a whirlwind of numbers, trends, and unpredictable events. For the average person, it can feel like trying to solve a complex puzzle without all the pieces. Well, fear not, dear viewer, because this is where the magic of artificial intelligence comes in. AI has the ability to process vast amounts of data at lightning speed, something that would take humans an unimaginable amount of time to do. It can analyze patterns, detect anomalies, and even predict future movements with a level of accuracy that was previously thought impossible. That's right, AI isn't just for self-driving cars and creepy realistic deepfakes anymore. Its applications have expanded far beyond what we initially imagined. From healthcare to finance, AI is revolutionizing industries by providing insights and solutions that were once the stuff of science fiction. It's also being used to try and crack the code of the stock market. Financial analysts are now leveraging AI to make sense of the chaotic world of stocks, bonds, and commodities. By using sophisticated algorithms, AI can identify trends and make predictions that help investors make more informed decisions. Think of AI as the Sherlock Holmes of market analysis, using its vast computational powers to sift through mountains of data, spot patterns, and make predictions about what's going to happen next. Just like the famous detective, AI can see things that others might miss, providing a clearer picture of the financial landscape. AI algorithms can analyze news articles, social media posts, and even satellite images to get a sense of market sentiment and anticipate future trends. By processing this diverse range of information, AI can offer a more comprehensive view of the factors influencing the market. It's like having a crystal ball, but instead of a mystical fortune teller, it's a bunch of really smart computers doing the predicting. These advanced systems can provide insights that help investors navigate the complexities of the market, making it easier to make strategic decisions and potentially achieve better outcomes. Section 6. Tech stocks take a tumble. Is this the end of innovation? One of the most dramatic casualties of the recent market mayhem has been the tech sector. Those high-flying darlings of the stock market, the Apples, Amazons, and Microsofts of the world, have seen their share prices plummet like Icarus flying too close to the sun. Now some folks are saying this is just a healthy correction, a much-needed reality check after years of irrational exuberance. Others, however, are worried that this is the beginning of the end for the tech boom, that the party's over and the hangover is about to hit. Only time will tell who's right, but one thing's for sure, it's going to be an interesting ride. Section 7. Experts sound the alarm. Should we be panicking? So, with the markets in turmoil and the experts sounding the alarm, should we all be running for the hills, cashing out our 401ks and investing in canned goods and ammunition? Well, as with most things in life, it's not quite that simple. Yes, the markets are volatile right now, and yes, there are plenty of risks on the horizon. But there are also opportunities. Remember, what goes down must come up eventually. And for those brave souls willing to ride out the storm, there could be some serious profits to be made. Of course, there's also the chance you could lose your shirt, so, proceed with caution. Section 8. What's next for the markets? Your guess is as good as mine. If there's one thing we've learned from all this market madness, it's that predicting the future is a fool's errand. Even with all the fancy algorithms and economic models in the world, the stock market is still a fickle beast, prone to sudden shifts and unexpected turns. So, what's the best course of action in these uncertain times? Well, if you're looking for financial advice, you've come to the wrong place. I'm a comedian, not a financial advisor. But if you're looking for a healthy dose of skepticism, a dash of humor, and a reminder that things are rarely as bad, or as good, as they seem, then you're in the right place. Section 9. Don't panic, yet. A final word of somewhat reassuring advice. In the immortal words of Douglas Adams, don't panic. The world of finance may seem like a scary, confusing place right now, but remember, it's always been that way. The stock market is a roller coaster, and right now, we're on a particularly wild ride. But just like every roller coaster, this one will eventually come to an end. And when it does, we'll all be able to get off, catch our breath, and maybe, just maybe, have a good laugh about the whole thing. Until then, buckle up, Buttercup, and enjoy the ride.